Today, I'm gonna show you the best 5-minute scalping trading strategy that you will find on YouTube today. Now, I've tested over 50 different indicators and I've never found one to be as powerful and as accurate as the one that I'm gonna show you in this video. Now, in a couple minutes, I'm gonna go into the charts. I'm gonna show you multiple different instruments that you're able to day trade with this Rooversal indicator that we've come up with. Now, a lot of people are getting this wrong. I do get DMs from people that go, hey, the strategy isn't totally working. Well, in this video, I'm gonna show you some of the nuances to this strategy because you don't wanna just take every single trade. And I have explained this in other videos, but I want to make it clear that just because the indicator goes off does not mean it is a confirmed buy or a confirmed sell or something that you should take that trade. There are other things that you need to look for, and I'm going to show you those in this video. If you stick around all the way to the end, I'm going to give you the opportunity to get in a $50 Bitcoin drawing that I'm going to do. All you have to do to be entered into the drawing is by subscribing to this channel and leaving a comment below. Now let's go into the charts. I'm going to show you exactly how this 5-minute scalping strategy works. We're in the charts and we are going to look over this 5-minute scalping strategy. So obviously you want to go to the 5-minute here. Obviously you have the different options here. We're going to go to the 5-minute. The first thing that you're going to need to do is get the Rooversal indicator. So if you haven't yet, you're going to need to go over to Rooversal.com and you're going to have to put in your email here. Now on the next page, you're going to see what the package deals are and you can get access for as little as $50 today. Once you do that, we're going to ask for your trading view name and then we're going to add you to the script, the invite only script. So the first thing is you're going to pull up this indicator. So we're going to go over here to indicators. We're going to go to invite only scripts. And these are some of the earlier ones, but right now we are using Rooversals right here. And that's what's gonna show up in your invite only script. So we're gonna click on that, which I already have it pulled up. And that's gonna pull up these little kangaroos and the rockets and stuff like that. So the first thing that I do is I go in and I change my settings. Okay, now I've already changed my settings to what I like. Now this one right here, if you wanna see more kangaroo tails, you can make the body percentage higher or lower. Okay, if you make this number lower, you're gonna see less kangaroo tails on the chart. If you make it higher, you're gonna see more. So let's see, for example, if we put in 0.40, you're gonna see more kangaroo tails. Okay, so we're gonna put that back to 0.33. See how some of them disappeared there? Okay, then I'm gonna go room to the left 10. If you want more, you can do room to the left 5. Now room to the left is just the amount of candles before it that it needs to not be at that price. So if it's at that price, 5 candles before it, so 25 minutes, if we're on the 5-minute chart, it's not gonna print a kangaroo tail indication. So I like to just put that at 10. But you can see, change it to 5, you're gonna get even more. So I'll keep it at 10. And candle size ATR, keep at 0.25. You wanna change your trading times to, from the beginning of the day to the end of the day. Now, I actually go in and I make sure that the simple moving average is checked and the exponential moving average. You can see what lines those are. This is the exponential moving average and the simple moving average. Now, the simple moving average is actually going to tell you whether or not you're in an uptrend or a downtrend, so a bullish or a bearish market. Okay, then we're going to scroll down here, and I also like to show the take profit and stop loss lines. Now, you can change your risk to reward ratio here. So this is a 2-to-1 reward to risk ratio. So basically, if you win, you're going to win 2 times the amount as if you lose if you hit your stop loss. So we're going to keep it at 2. And then I'm going to do show entry, stop loss, take profit lines. And you can see where the red and the green show up. Now, does this strategy work? I just want to show you a short video that Earn with Todd Harrison put together yesterday, just showing some results from running this on an EA bot on CTrader. And so we're gonna have the bot available at some point in the near future, but this is the results taking trades with the bot using these settings.
Attention Forex traders, I created the world's best trading view indicator and I have the backtesting proof that I'm going to show you right here. There it is right there. This is NASDAQ 100 using the MNQ symbol, official future symbol for NASDAQ 100. But this indicator took 5 trades at 1% risk with an 80% win rate, which was good for a 13% gain on that account. Now, if we take a look at US 30, your mind is about to be blown. The first trade this indicator took, completely automated, was this short up here on US 30 right on the top. As you can see, there was a nice little M pattern, trade triggered. We held for at least 20 hours and that TP was smashed. Now, we did have one losing trade right here, but since we knew we were in a downtrend because of this trading view indicator, we were also able to nail this entry up here for another 20 hours. That was good for a 37% gain using only 1% risk.
So step one, like I already said, you you add reversal to the chart. We've already done that. The second thing is change the settings. We've already done that as well. Now, the third thing that you're going to want to do is pick the instrument that you're going to want to trade. Do you like trading indices more, stocks, crypto, forex, futures? What do you like to trade? So if you're new, you're going to want to pick one, maybe two different instruments to trade so that you can get used to trading those. And the more you see the same chart, the more you're going to be able to see and predict whether or not the price is going to go up or going to go down. But this does work on any instrument that you choose. I prefer to trade NASDAQ and Dow Jones, and then also USD JPY and Euro USD. And you're also going to want to base the instrument that you pick off of what times are best for you to trade. Now, you're going to want to trade based on certain time frames, and at certain times, different forex pairs or the indices are more volatile, which means there's more people trading and the markets are open and there's more liquidity. So the markets move more and you're able to catch more changes in price during those times. So if you're trading Forex, there's 7 major Forex pairs, and those are going to be the Forex pairs that are related to the US dollar, which is the #1 currency in the world. It's a world reserve currency. But the 7 major Forex pairs are going to be USD JPY, Euro USD, GBP USD, so the pound to the dollar. Then you have USD Swiss franc. You have AUD USD, USD CAD, and NZD USD. So those are going to be like 7 majors that you can choose from. There's also minor Forex pairs. You can also trade indices as well. But you're going to want to find at what time those markets are open so that there's more changes in price, so that there's more opportunities for you to trade. So here's a few things to keep in mind. First of all, you're not going to be trading on the weekend. Now, the difference between trading Forex and between trading regular stocks is the stock market is only open from 9:30 to 4 p.m. on the weekdays. Now, if you trade Forex, the markets are open 24 hours a day, 5 days a week. So the one time you're not gonna be able to trade is on Saturday and Sunday, okay? Unless it's like later in the day Sunday when the market's open again. So like late Friday until late Sunday is the times that you can't trade. But during the day, you're going to want to trade when those markets are open. So if I was to trade indices, I'm going to want to trade during when the stock market is open. So from 9:30 to 4 o'clock, because the indices are made up of stocks. So the more change in the stock price, the more volatility with the indices. But if you're trading Forex, you can trade really any time of the day during the week, depending on what works best for you. Here's a little chart here of when you should trade and when the markets are open. Now, I'm in Eastern Standard Time. I'm in Michigan, so I go off Eastern Standard Time. If you need to, you can change these over to your times or look up the trading times for your time zone. But as you can see right here, Eastern Standard Time, the London session opens at 8 a.m. The New York session opens, okay? Now, the times that you have the most trading going on is the part where it's the darkest on here in the background here, the light or the blue. So you can see like during these sessions, it's kind of light, especially light when there's no markets open. It's the most volatile, so there's the most trading going on when there's 2 sessions going on. So you have the London and the New York session. So the London session, anything related to the pound, the British pound, or Euro, that's the things you're going to want to trade during the London session. Anything related to USD, you're going to want to trade during the New York session. Now, if you trade during the overlap, so from 8 o'clock until 12 p.m., so noon, from 8 a.m. to noon, those are going to be the best times for you to trade. So you can also trade these other times as well. Like if you live across the world and maybe your schedule doesn't work, that you can trade, from 8 o'clock until noon. Maybe you want to do the Sydney session or the Tokyo session. That's going to be up to you guys. So that's going to be the next step. That's going to be the third step, is picking your instrument and using the trading session times and when you can trade as what you want to focus on. The next step is step 4, and that's going to be to actually analyze the chart. So let's say I wanted to trade USD JPY. So I go into TradingView. Now, if you don't have TradingView, you can just go to tradingview.com and sign up for a free account. There is also paid accounts if you want more features, but you can definitely do this with a free account. You can get access to the indicator with a free TradingView account. Now, we have made this indicator for CTrader, but we're not totally switched over to CTrader yet, so that's going to take a little bit of time. But in the future, you'll also be able to use this on CTrader. But at the current time, what we're doing is getting the indications on TradingView, and then placing the trade on SageFX or MetaTrader, which is the platform that we use to trade. Now, I know I did mention in a previous video that MetaTrader, people do get scammed on MetaTrader, but the way you avoid that is by not giving someone your account information, not giving anybody any money to trade for you. You handle all your own money and you'll be fine. But basically, we're gonna go into the charts now, okay? And I'm gonna actually go back to last week because it is Sunday night, so the markets are somewhat slow right now, but we are on the 5-minute time frame. But I'm just gonna go back to last week because obviously Sundays are fairly slow. The markets aren't open right now. So the market is open, but the stocks aren't open. Like the London session or the New York session doesn't start until 8 a.m. tomorrow. So right now, there's only a little bit happening. But I'm just gonna go through here and we're just gonna analyze. So basically, the way that you trade, okay, is you're gonna get an indication. Okay, so let's say we're right here, it's coming up, and this little indicator goes off. Well, what that means is that there is a kangaroo tail right here, and what this is saying is that you should take a sell. If it's red, that means you should sell. If it's green, that means you should buy. But you don't want to take every single trade, so that's why we need to analyze the charts and see what's actually happening. Because I recommend the highest probability, the highest win rate you're going to get is from trading with the trend, okay? If the moving average, as you can see this line right here, if that's red, that means we only want to be taking sells when it's in the red. We don't want to be taking buys. Now when it's in the green, that's when you take the buys. If it goes back to red, you only take the sells. But you're going to win more if you only trade with the trend, okay? And you don't need to trade a lot to make a lot of money. You really only need to find, 1, 2, 3, maybe 5 setups a day. But even with 1 setup a day, you can make good money. So don't think that you have to take every single kangaroo tail just because you can, because you might end up lowering your win rate and then you may not end up profitable if you're not smart about this, okay? So what we're gonna do is we're gonna wait for an indication to go off. So for example, we'll look at this one because this is in a downtrend. As you can see, it was red and this popped up. Now what happened is, here is a kangaroo tail. I know it's a little hard to read sometimes, but here's the kangaroo tail. Now what you want to look for is, what does it do in the candle or two after the kangaroo tail pops up? So this one, for example, the second tail, it started going down. Once it gets down here, I'd be placing the trade somewhere in here. And that's when you need to choose your lot size. Now we do have something coming. We're going to be adding this to the Rooversal indicator within the next week or two, where it's going to actually determine this for you, so you don't actually have to do a lot size calculator. But if you're not sure what lot size to trade, go to lot size calculator and just put in, whatever you're trading, whatever currency, your account balance, how much you want to risk, which I would recommend keeping it around 2 to 3% of your account balance. Only risk that amount. And then do the stop loss in pips. You can do all this, but really it requires working a little bit on a demo too, so that you know exactly what you should trade and like how much of it you should trade, because sometimes these moves will happen so fast that you're gonna miss them if you're over here messing with this. So what I like to do is, I know just well enough because I've traded enough. I know, what size lots I need to be trading with, and you can kind of like get a better idea of it, and always start small and then move up. If you're like, hey, I'm not trading it, I'm not risking enough, then you can start risking more, but start small. Don't get crazy and be like, well, let's just try what happens when I do 40 lots, because that, you could lose your account very quickly that way. But basically what happens is you're looking for that tail. Now when that indication pops up, we can see the next one doesn't close above that last candle. So we're kind of even here. I like it to close underneath it, but this one's kind of like almost another kangaroo tail right there as well. So you'd be looking at the next candle, and it went down. So we basically would have entered the trade right around here on a 2-to-1 risk reward. We're gonna put the stop loss is this red line right here. This red line, we're gonna put the stop loss right above our kangaroo tail. Now this is kind of putting it right at the edge. I put it up just a little bit higher because you got to account for the spread. So you don't want it to like come right to the top and then come back down and it hit your stop loss, because there's a little bit of a spread. So I always put it just like a little bit above it. Bullish kangaroo tail, then I would put it a little bit underneath the edge of the tail. Now if the tail is really, really long, like sometimes you'll get ones that are like super long like this, I may maybe put the stop loss only halfway down, because that's just such a long tail that it's like you might lose a good amount if you lose that trade. Like for example, this one would have, and look how big that stop loss is. So if it's really big, I'll just put it like somewhere in the middle, maybe 3/4 of the way down. But like for example, this trade I wouldn't have taken because we're clearly in a downtrend here. This one I wouldn't have taken because we're in a downtrend. It's saying it's going to go back up, but we're in a downtrend. We're going to trade with the trend. This one, same thing. I wouldn't have taken it, and it would have, all three of these would have failed because we're on a downtrend. Now we finally get one that's a bearish kangaroo tail. Well, this one would have won because we would have entered, we would have put our stop loss here. Here's the 2 times risk to reward. We would have smashed that. We could even hit 3 or 4 R's on that. Now this one's really close. It almost hit the take profit here, but this was on a downtrend, but it also had a breakout up. So it was ultimately on the moving average. It was on a downtrend, but it also was clearly breaking out here. So I might have taken that trade, but either way, it almost hit it would have definitely hit 1-to-1. It wouldn't hit 1-to-2. It was really close to the green line. This one I wouldn't have taken because the market's kind of just going sideways. Now you can see it's starting to turn around here, and this is starting to turn green on the moving average. So we'd have taken this trade. We placed our stop loss right outside the kangaroo tail, the edge of the tail, and then our take profit would have been right here. So we would have smashed that. We would have skipped this one because we're on an uptrend. We would have skipped that one because we're on an uptrend. We would have skipped that one because we're on an uptrend. Actually, let's look at another pair here. Let's go to Euro USD. As you can see here, right now, it was kind of the market was going straight across. As you can see that line, it's kind of turning green, red. So it's kind of consolidating right here. And then we hit a kangaroo tail right here. Now, this kangaroo tail is very, very, very small. So when it's really, really small like that, it's almost like not worth taking the trade. But it did end up coming down. We wouldn't have taken this trade because we're on a downtrend now. Same here. Now this one we would have taken because we're on a downtrend. Now the stop loss would have been right here, and then 2-to-1 risk reward would have been right here. You could have probably let this run 5 to 10 Rs, you know, maybe 8 Rs, something like that. But that's up to you. You also have to pick, you know, how much risk to reward do you want to take. Now we have another one here. We would have taken this trade because we're on a downtrend. So we got the stop loss, we placed it outside. Now if I would have kept it right at the edge of there, it would have probably hit it. But obviously, like I said, I go a little bit above it because you got to count for the spread. Now we would have taken that, and 2-to-1 risk reward would have been right here. We would have easily, this would have dropped, yep, that would have been 680 pips that came down, or almost 700 pips off that one. Or we could have just let that run for a long time because it's continuing to go down. We would have skipped this one because we're in a downtrend. We would have skipped these two. We wouldn't have skipped this one. Looks like it may have hit the stop. We're really close right here, but like I said, I put it a little bit above it, so we probably wouldn't hit the stop. Would have came down, hit the take profit right here. We're still in a downtrend, so we do the same thing here. Like I said, put it outside of the candle a little bit. Wouldn't have hit it there. It would have dropped down and hit our 2-to-1 take profit. Now we're still in a downtrend, but it did cross the moving average, but then we get hit with this one up here. Now we would have taken this because we're still ultimately in a downtrend. It didn't start the green until like that point, basically. So we'd take that one. That would have hit our take profit easily. Here's our stop loss. That's where we'd place our stop loss, and here's where we place our take profit. We'd skip that one. Now we're consolidating here. It's kind of going straight. Would have hit take profit, 2-to-1. Same thing with actually all three of these. There's 3 here. So that kind of gives you an even better indication. Then all of a sudden, boom, 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 came down. Now we're starting to go up. Now this one, we would have hit the take profit right here because we are on green. So that means we are going in an uptrend. Now these ones right here, you know, this is going against a trend, but it's also kind of evening out. So that would have been, you know, up to your discretion there, but we would have won that one and won that one. I mean, look at this one. We're still in a downtrend. We hit this one right here. Boom. Look at that. I mean, easily hit the 2-to-1. I like doing even higher than 2-to-1, but that's up to you. Now here, we're still going down, so we wouldn't have taken those. Wouldn't have taken that. Would have taken this one. Now this one might have failed because it did come up right there, but like I said, if you place it a little bit outside the stop loss, you come down, hit your take profit. This one we wouldn't have taken. This one we wouldn't have taken. So now it's starting to go up. Okay, now it's changing here. Wouldn't have taken that, because see, as you can see, it's coming down here. Wouldn't have taken that. Okay, now it's going up. Okay, it's still about going up, so I would probably have taken this one, easily hit 2 to 1. Same thing with this, easily hit 2 to 1. Then we get right here and it starts kind of starting to go down, tumbling down. So I probably would have skipped these two. Going down. All right, so now we are on the Dow Jones. So as you can see, the line is turned green, so we'd take this one here. But you can see how far this runs. You can get much higher trades than just 2 to 1. We would have taken this one because we're in a downtrend. That would have won. Skip those. But see, it does work even in the downtrends as well. You can still get times where it moves up quite a bit. Okay, so we would have taken this one here, and as you can see, this candle dropped it down to the take profit down there. You can see we're kind of consolidating here, but we're ultimately still in the downtrend. So we have a stop loss up here, take profit down here. That would have won. So as you can see, it takes a little bit of discretion, a little bit of experience to be able to spot when these are working and when they're not. But ultimately, the kangaroo tail means that there's a kangaroo tail. The rocket means there's a kangaroo tail with divergence and a volume spike. And the rocket just means that there is divergence and a kangaroo tail on the chart. So this is the one candle price action strategy that works very, very well that we've set up in this indicator, and we have a lot more features coming as well. And that, my friends, is how easy this can be. And I really appreciate you stopping by this channel. Make sure to subscribe if you want to see more videos like this and more trading strategies. If you want to get the all-encompassed version of how to trade kangaroo tails, make sure to go to kangarooguide.com. And if you don't have the Rooversal indicator, you're going to need that as well. Make sure to go to Rooversal.com. And if you want to be entered to win the $50 drawing in Bitcoin, all you have to do is leave a comment below and subscribe to the channel. Thanks for stopping by. I will see you on the next one.